Well, folks, right back up. Just like that, we're back at the highs for the week. Tariffs or no tariffs, 90 days, you guys are going to have to explain that to me. Look at the companies that are benefiting from this. Goldman Sachs ripping it this quarter. Tim Quast, 8:35. He'll talk about market structure. Let's get things started on this Monday, pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Hope everyone had an excellent weekend. Let's get things started. Nicely in the green, 69 handles at 54.60. We'll talk about where we're at technically. The buck getting lit up again, down 68 cents, 99.21. TLT can't catch a bid, down 12 cents near the lows of the move, 86.67. USO flat, 66.65. Gold peeling back a little bit here. GLD down just 70 cents, 297.23. SLV back over 29, up 15 cents at 29.34. And Bitcoin, nice little bump off that 75K level, pausing here, up $1,000 at 85,100. Let's get the show started. Let's bring in Triple D. Triple D back from his little hiatus. How was that little vacation there?
Yeah, went down to St. Pete's, Florida. Absolutely beautiful weather down there. The people love America. You know, it's been a while since I've been in America, been a few months. Love America. I got to tell you, the best people down there in St. Pete's. Actually, you know, I was like my father-in-law's down in Gulfport, which is just, you know, inside St. Pete's. Took us, you know, all over, went to the beaches, we're packed. Airlines, I'll tell you, man, boots on the ground. Stuff seemed pretty busy, man. Like pretty busy.
Yeah. Christian
I
said,
didn't see any recession out there.
I know.
I didn't see any recession out there. Let's
Christian
say hi to the Brentster here for a second.
Brentster, come on. We got to
He's
congratulate
hiding in the background.
you.
He's hiding in the background. He's tired too. Brentster had a long weekend too.
He's a national champion. We have a national champion on here.
Talk to me.
Western Michigan Broncos win the Frozen Four.
Woo!
They kicked butt too, Dennis. It was a great game. I actually watched it. So just winners, nothing but winners on the pre-market prep crew. National championship. I thought the Brentster on Sunday, he was definitely celebrating. 6-2 they won. It was really a
very
good.
Game.
Well, yeah, first time that Western Michigan has won a national championship in anything since like cross country in the late 60s. So
it was the mid 60s and it was back to back, 64 and 65. But those Broncos were running back then.
Hopefully we can make it another back-to-back championship, but we get to say that we are champions for one whole year. Feels great. Feels great.
If we're talking sports too, we better talk the Masters because I was like, he choked. It's like he's done. He's done. And then obviously in the playoff sets up, you know, even a closer. I was like, there's no possible way he could choke twice, and he did not. So McIlroy, congratulations. But it was not an easy path, Joel. Like everybody was nail biter when he was hitting that last 2-footer. People were still biting their nails like, because literally, like, I mean, he was ready to win it, you know, and then that putt went wide and you're into the playoff. It was pretty exciting. I was at the airport bar when that was happening.
Nice.
It was fun to watch. Whole bar cheered, though, when he actually did finally sink it, so, which was pretty cool. So,
what about
congratulations, McIlroy. First green jacket.
I don't know if there's any McIlroy related stocks because the market's up today.
Yeah, or Tiger would win and Nike would be up always.
Nike's
up. There you go.
If you guys ever see me on a golf course and I'm playing, don't stand up like in the fairways like that because you're gonna get pegged, man.
Oh, you look at the TV and what they're hitting into, and like if I was hitting there, I would definitely just like beam somebody for sure. Because when I start thinking about it, that's where my ball's going. So I would be so paranoid driving into thousands of people that I'm just gonna like, I'm like, oh my gosh, look out, four.
He's a Nike guy, but I mean, I guess that could lead us into the topic of the day, Dennis. Tariffs or no tariffs?
Oh gosh, I don't even know if we know. So we had, and again, I was following the markets over the weekend, even though I was on vacation. So you get this report on Saturday that smartphones, computers, potentially chips, all going to be exempt. We're like, holy cow! I'm like, Apple's going to go open up like $20 on Monday, on that headline. But then from the White House, like, no, not true, fake news. And I'm like, oh, Apple's going to open down. But now we're hearing reports, no, there is going to be maybe not exemptions, but lower rates. And I mean, I don't know exactly if they know what's going to be here. So, but the market right now is banking that, hey, fool us once, shame on you. Fool us twice, shame on me. Because we saw what happened with the 90-day kick down the road a week ago. And they're like, the market tanked when there's like, oh, it's fake news. And then it ended up being true. So, I mean, the market is more believing of the leaks, it seems like, than actually what is coming out of sometimes the White House. So Apple is still trading up 6%, despite I don't know if anybody really knows exactly what the hell is going on. But it appears that smartphones in the worst case scenario are probably going to be a lot less tariffs on the parts coming in for that. So, or at least on the smartphones themselves. So that is why Apple currently trading up 6% here right now in your pre-market. It's your big market mover.
Yeah, Brett, do you have all the details of what was said on that, or do we even really need to know?
It's like it's really hard to track down. Yeah, honestly, I think Dennis gave a pretty good description there. Believe it or not.
The Dell too, because we're talking also in the same headline was computers. Still on my Dell. I had bought more Dell at 72, and then later that day when we had the biggest rip of rips ever, I can't remember, but I sold those shares that I bought at 84. But I still have some Dell. So now it's back up here at 87. So I wish I would have bought the dip maybe Thursday or Friday. Did not do that. Overhead resistance here though. Like, I mean, okay, let's just set up the landscape here. S&Ps, Apple, everything's ripping. Everybody's feeling pretty good. I mean, there's going to probably be some deals to be had. People are like now start thinking, okay, we're going back to all-time highs. I'm getting it.
No.
It could happen.
It
I
could.
don't know it can't happen. In this market, anything can happen. We've proven that. But I still think like there's not going to be the easiest road in the world. And I still think as you get higher here, especially on SPY, 550, 560, that starts approaching, overhead supply comes in heavily. So I feel like still the easy money's been made on the long side, but we're still just kind of chopping around as well. So, we broke down for 560 the day. Obviously, all the tariffs around the world were announced. And, we've been clawing our way back here because, we don't know if there's going to be 90 days. And it sounds like they're kicked the can down the road. There's lots of other things to think about. There's lots of, appears to be types of exemptions or at least, lower rates for certain products. We still just don't have all the information. And that's why the market is wild as it is, because the market is still not sure exactly what we're getting from the tariffs from the Trump administration.
We're not back at the highs from last week, but pretty darn close. This morning we got pretty close to the closing high on Wednesday. So I'm just looking at it, and it's like within the 50% area of the for the S&P. You got two highs from Wednesday and Thursday. You have that SPY print that people still are going to be buried under at that that mark on Wednesday. So I mean, tons of resistance here, and I guess it's just going to be what's the next headline? Is the next headline going to be? I don't know. It's just this is what the market's waiting for, the next headline.
That's all they're going to continue to do. So we are going to be in that headline-driven market until further
Forever.
notice. We said that a week ago. It continues. So there could be a headline tomorrow, China's escalating or China's doing something, or there could be a headline that, hey, we got to deal with, this country, or we've got this. Deals up, and obviously escalation of tariff problems, markets go down. But right now, the market's starting to become a little bit numb to the whole problems over in China, which is interesting. Like they were talking a lot of bad stuff last week, even the administration leaking out maybe they're going to delist those ADRs like Alibaba and
Yeah.
Baidu. And I mean, that's scary in itself as well, because I own a few of those things. So I mean, it make me feel all warm and fuzzy owning these things, thinking that they could get delisted. I mean, it's a possibility. But I mean, we've come back a long ways, even on the FX high. We got hit really hard, obviously, when all those tariffs were announced and, the escalations that we've happened. I mean, we're not back to the point of where we were when those announcements happened, but we're not far from it here. And I think like tension is a hell of a lot higher between the China and the US than it was a week and a half ago. So it kind of, for me, this rally in China stocks almost feels like a little bit of a selling opportunity here, especially FXI coming all the way back from like $29 4 days ago up to 33 now. You're talking about over 10% rally in 4 days. I don't know if it's warranted.
Christian was talking, a lot of it is like dollar effects, right? Because these ETFs are basically short the dollar.
Good
And
point.
yeah, and the dollar. So he's like, don't get fooled, don't get fooled. These companies, but yeah, China's been holding up here, up again in the pre-market. Baba's getting a rebound, but there's other stocks that are moving off Trump tweets, or and that's your critical metal stocks. He wants stockpiling of those. So you have MP Materials Corp,
Yep.
trading up $2.50 at 25.14. Not really seeing anything in here. And then I saw another one. I did trade. Oh, just keep an eye on this area, folks. Here, I don't know if you're trading this today, but you did pop over 26. And man, you got mounds of resistance in that 26.5 to 27 area. So see if we get up here. TMC is a smaller stock.
Okay.
That's up 36 cents. Dennis, who else do you throw in that group?
Well, chat, Mark's Maker is giving us one here that I'm not really familiar with, but I will write this one down right now. Thank you so much for that. USAR, which is USA Rare Earth. I'm not sure what that company is. I've never traded that before, but it's up 22%. So I think we put that down in our MP camp. USAR, writing it down right now. So if you got any other ones, let us know. That's why we got you guys, chat, to get more trading ideas from you. So that's a good one. USAR. Not saying it's a good one to buy, but saying it's a good one to have on your list. I don't know buying or selling these things. Sometimes, it's been a sell on the news. This is the problem. It's still in this market where chasing really hasn't been rewarded. So I'm not coming in any day when the market's up 70 handles and saying, oh, I want to buy stocks now. I'm always waiting for a dip, because you know what? In this market in 2015, this has been the ultimate dip market, where it seems like you always get another dip. Nothing is 100% guaranteed, but man, there has been a lot of pullbacks. Just like, when I was selling on Wednesday night saying, well, this seems to be a little bit overdone. Bang. We're down 5% the next day. And everybody's like, oh, here we go again. But we've been trying to claw our way back up. So just remember, one thing in 2025, it has not paid to chase.
What a great name. The bots must have went to this one like right away. The USA Rare Earth. I mean, what better bot picking name could you get than that? But there it is. I mean, more news. News. Now I have something that I want to discuss. There's a bunch of bull.
Dun 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 dun. He'll be
What? How
here
did
all
we?
week, folks.
How did the whole world miss this? So on Friday,
People are like mad about it, Dennis. Like on Reddit, people are mad.
I did not know about this. And the whole world, and again, maybe I have an excuse because I was actually on vacation, but I mean, I don't think the whole world knew about it. So SKGR SPAC comes out on Friday and goes public as Webull. So SKGR went off the board at $12 and then goes like 13 for Webull. Well, all of a sudden over the weekend, everybody's like, oh my gosh, Webull is public. They're like, I trade on that platform. I didn't know they were public. So this morning, a full day after it went back Friday, or a full day after it came public via SPAC, it's up 100% now. It's up 100% here this morning, trading up to 26.
Actually,
So,
I did see the ticker going, and I did see the name, and I was like, and I just didn't get back to it. And wow.
Drew's saying Drew's saying we just missed it. I'm telling you, Drew, the whole market missed it because it didn't go up on Friday. It basically traded the same price. It didn't go up till today. So, Drew, you may have known about it. I hope you bought it, Drew, because a lot of people did not know about this. The market's telling you it didn't know about it because it did not move up when it officially went public. It took a full day. So if you want to talk about how uninformed or how, this market is just, the market that prices in nothing, there may be no better example than this. There may be no better example of a market that prices in absolutely nothing. It's like Webull's, we could trade Webull? Oh, let's go buy that today. Literally a full trading day after it went public.
There was a whole subreddit about Webull traders, like traders using Webull being mad because they didn't know about the IPO. Like, what, you couldn't put an alert message on your platform that we went public today? So there's literally people using the platform who didn't know until today or over the weekend that they can now buy the stock in the stock market.
Okay. So chat's giving me heat for this. Chat, you guys got to give yourself heat, because if you all knew about this and you didn't buy it on Friday, like at 3 o'clock.
No, it was 4 o'clock, Dennis. The move was after hours.
I don't see that. I see public trading. I don't see that at all. I see the thing was trading here. You think it came back after that? Because I see trading during the regular session. Look at you, bring up your chart. You don't see trading on Friday?
Well, that's what the trading was in whatever, SPGR.
You think it was just trading as SPGR on Friday?
I think so.
Is that
I might be wrong. I might be wrong.
Because I have BULL starting trading on Friday. So maybe my platform jumped the gun and it was still trading as SKGR and nobody knew about it. But I have trading from Friday where it was trading like $11 and then it blasted off around 3:45 with about 15 minutes to go. It blasted off from 10 to 13. That's the blast off day. So I actually think it did trade during this session on Friday. Martin, that's exactly what I'm saying. How did everybody miss this? I have an excuse. I was on vacation. How did you all miss this in the chat? Because bang, you had 15 minutes, it looks like, to buy that thing on Friday, and then boom, 114%. So don't tell me this market isn't full of inefficiencies. It absolutely is still full of inefficiencies. These high-frequency traders aren't as good as we think they are.
Okay. All right. Let's get to some fundamentals here. Let's talk about some earnings. Let's talk about earnings in a big bank stock. And they had their best quarter. They're just raking it in.
Raking it in.
14.12 versus 12.35. Sales beat by 15.06 versus 14.81. We're entering the second quarter with a markedly different operating environment than early in our year. We remain confident in our ability to support our clients because we love volatility. No, they didn't say that. But so far, so good for Goldman Sachs here. Traded over 515, but boy, you got a long ways to go to get back to all-time high.
Okay, a lot of things for me because I was away on Friday. You guys need to inform me on what happened, which banks on Friday. So who reported on Friday? We had Wells. Who else?
It was
JP Morgan started the party.
Yep.
And
Wells.
Morgan Stanley.
Yep.
You'll say, why does that matter? Because they often lead the path for the rest of the banks. Like, what happens? Because they always seem to report pretty good earnings, these banks. Do they buy them on the good earnings? Do they, and again, it's difficult to just siphon it out, like to take it out, because we know the market's moving everything right now. Like the overall market is still driving the bus. But it looks like JP Morgan closed fairly strong on Friday. Wells Fargo looks like it closed kind of weak. Looks like it must have dropped and then maybe popped a little bit there. And then who was the other one? JP Morgan, Wells, and who?
Morgan
Citigroup.
Stanley.
Morgan Stanley. Oh, Morgan Stanley reported too. And that's important to know as well.
So JP Morgan and Morgan Stanley were beats, and Wells Fargo missed on their sales figure, I believe. So I think Wells Fargo was the big bank that was leading lower. And then we have, where's my little handy dandy preview sheet? We had Goldman today, and then tomorrow we're gonna get Bank of America and Citigroup. We're rounding out the big bank earnings tomorrow.
Okay, so Goldman, the beat $40 billion buyback. That's one of the biggest buybacks you're ever gonna see. So they're serious about like saying, and we've been starting to see that happen. You know, there's one thing to consider here is as stock prices has come in, you're starting to see companies saying, look, stock price is too low. We're going to buy back some shares. I think you could see more of that. The reaction to them have been muted, though, these buybacks. Because they have Goldman here, beat a huge buyback. And it's only up, it's up twice what the market is, 2.6%. So it's a decent morning, but not, you know, just rocking and rolling and, you know, on fire either. So, question, let's just talk even to the chat. 2.36% dividend. You know, Goldman Sachs, always been pretty much the best of breed. It's off 10, you know, you're talking like 25% from the highs. Is there a place for Goldman Sachs in our long-term portfolios, folks? I'm asking you. I am not owning it, but I'm asking you for myself and for anybody else who's interested. Give us your opinion in the chat on GS. Would you guys be a buyer? Joel,
do you have any other?
I don't.
Do you have any other big banks in your portfolio?
I had JP Morgan, Brentster, and I sold JP Morgan. So I put it in, I sold it because I made 20 points in a day on Tariff Wednesday. And I was like, well, you know, when you make 8-9% on your JP Morgan position in one day, you take the money and run. I want to put more banks in my long-term portfolio. So, you know, I have a place where I could buy JP Morgan or Goldman Sachs. I always like buying best of breed. So I'd probably pick on JP Morgan or Goldman Sachs if I was picking on the two. I can be talked into it. I don't know if I'm necessarily chasing up 13, but it isn't up that much considering what they just said.
Do you love the Goldman buyback so much that you are considering replacing it with JP Morgan?
Or you mean the other?
Do you think that's
like, yeah. Like I like the Goldman, so that I would put Goldman over JP Morgan. Yes.
Well, because of the buyback, I'm asking.
Yeah, I think so.
Okay. Yeah.
I mean, it's showing confidence. You know, obviously, we're also going to see. It's a little bit. The issue is with Goldman is obviously all the U.S. banks are going to trade off the markets as well. I mean, you know, investment banking, asset management, all in there as well. As markets get hit, these companies aren't making as much money. As markets go up, they're making more money. So I mean, they are leverage plays on the market as well. So, you know, S&Ps have come back a long ways here. Do I want to buy anything today? No. But would I put Goldman Sachs on my shopping list? Maybe. But I do think like, no, that's pretty good stuff here. You know, pretty beat $40 billion buyback. Sounds pretty good.
You're not getting a real clear answer here from the chat. The chat's they're kind of mentioning, but nothing really clear, Dennis. So I don't know if they're going to be able to help you. The stuff on the buybacks, I just want to say, I don't know that a buyback is going to affect an individual stock a ton, kind of like we're seeing with Goldman, but something that Christian
said. Why is
said,
that, Brent? It sounds like you've got some history and, you know, understanding of. I do as well, but I want your unbiased opinion here. Why do you think
I think it's because we have a larger theme here, which is just buybacks in general and what it means for the market. Something that Christian was saying a week or two ago when Broadcom announced their buyback was, I'd like to see more of these. And if I'm a bull, I would like to see more of these buybacks. That would mean a lot better things for the entire stock market, in my opinion, than it's going to mean for like each of those names.
I think it's a great point. I think, you know, I think there's more buybacks coming. I think the reaction, you know, even the AVGO case was pretty disappointing, though. It was pretty disappointing. So maybe eventually, once the market, you know, let's overall Trump White House maybe slows down in its bus driving of the entire market here, maybe it calms down. Maybe we start seeing individual company news start to matter again. because it really just doesn't feel like any individual company news has mattered.
Yep.
I mean, you can look at the chart of
Mhm.
AVGO and you look at the chart of SPY, and they're virtually identical. Chart of Goldman Sachs, virtually identical. Those companies don't really have that much even to do with each other, Goldman Sachs and AVGO, but the charts look the same because right now White House is just driving the bus and the stock is the stock. Once the VIX starts coming in, these individual stories might start to matter, though. So maybe we do need to see more companies giving their stocks vote of confidence and saying, hey, look, you guys don't want to buy the stock? We'll buy the stock. I like the vote of confidence.
Yep.
I'm surprised it's not on more.
That's what I'm saying.
Yeah. So
But AVGO, that Joel just missed the whole time. That Brent was saying that's what we're arguing here is that you used to see buybacks announced, and sometimes stocks would pop up 4 or 5%. We are not seeing that. We're not. It hasn't been a good reaction. The AVGO buyback last week, which was how big? It was a big one too. More than
4 billion.
I'm talking.
billion?
No, I'm talking more just overall, like how I feel about the market and everything. Not not this me thing. I mean, look at what I mean. For me, I mean, after we were
It's 10
holding
billion.
our breath yesterday or last Monday, when we went to 48.32 in the S&P, then we're basically back at 5,500. We got back half of the move. I look at Goldman Sachs as just like a high beta, I mean, I don't know. I mean, either, oh yeah, this thing's going right to 550, 560, or what's going on? I mean, I think the whole uncertainty over the market, and I mean, we really don't
Oh, for
have,
sure.
any clarity. But to me, I think I'd be, if I bought this thing on the dip and then had the earnings and then in the buyback, I'd be like, why is this thing at 520, 530, 540? I just see, it's to me it just seems like,
It's lagged the market on the bounce.
yeah,
Some of
that
the banks
concerns
have.
me.
Yeah.
Yeah.
JP Morgan's come all the way back. It's best of breed. It's been the only one that's really come all the way back. Wells Fargo's still significantly off. Citigroup significantly off. Like just looking from the day, which we could you can say which day it was. It would have been the
Last Monday.
yeah, the second. The second? Was that the day they announced? Yeah. So April the 2nd.
Oh, I'm
I
talking
believe it
about
was.
when the market bottomed. Okay, go ahead.
Yeah,
Keep
but
going.
I'm just looking back to when they were announced, and like some have come back. Like JP Morgan is almost back to where it was on April 2nd, like all the way back up. You obviously have, Apple has come, a long ways back up today. You're talking it's only off like 10 points and after being off like 40 points. So it's been a big bounce back. To your point, Goldman Sachs is still off over 10% from where it was that day. So it hasn't come back nearly as much as JP Morgan. So I see the point you're making. It's been the laggard of the group here. Can this buyback this morning get it accelerating, get people excited? I mean, it was 500 a few minutes ago. It's 506 starting to climb. I think it's great news. I just can't chase, though. I just can't chase in this environment. I can't bring myself to do it because every time I think about doing it, I would lose.
Why
They
do you
also,
feel like you got to chase though, Dennis? You don't have
I
to
don't.
chase.
No, but I'm saying in a normalized environment, I feel like Brent 2.5%. I feel like it's not up enough for like a beat, and the
I gotcha.
buyback.
Yeah.
So I'm like, I feel like this could be up 4 or 5% if we were like in normalized markets right now. So I actually feel like they're underpricing the $40 billion buyback. So part of me thinks maybe I'm not actually chasing right now. Like, do I expect it to go red on this on a day that the S&P is up 1.42% and they come out beat with a huge buyback and it's barely up more than the market, like 1% more than the market? I'd be like, if I was Goldman Sachs, I'd be really disappointed with my action today. That's why I think maybe we should be at 514, 515. Maybe this is the day that this could come back further. So I'm not even sure you are chasing here.
Morgan earnings weren't great, and they were kind of poo-pooing it, and then they it actually took out the low from Thursday, but then it just got sucked along with the market, and it came back up. But we got Bank America tomorrow. We got some other bank earnings, but
Citigroup
yep,
Tuesday.
it's Citigroup.
We also have, there's some smaller like PNC Bank. I'm just looking through the list of banks this week. Schwab's on Thursday, which is obviously broker. US Bank Corp on Wednesday is a big one, USB. So, you're getting through the majors for sure. Like after tomorrow, you're through the majors with Bank America and Citigroup reporting.
Okay. Intel into the news here. That's trading higher again. They're going to be selling off part of
Selling
their
something,
Altera
not selling
unit.
something. Yeah.
I'm
And
sorry.
then also the chips are all popping here this morning because they said, maybe some of the semiconductors may not be, they may have some slower rates was set out of the White House too. So if you look, even like a Micron is up 6% here this morning. You got your chips trading a lot higher here this morning. SMH is up 2.2%. So Intel's up 4. I don't know. Intel's just been such a dog. You want to talk about underperformers? There's been no underperformer for the last decade than Intel. You ever selling your Intel, Joel? Or are we holding this till we die?
I know. I dumped it. I dumped
Oh,
it.
you're
I didn't
gone.
even know it. Yeah,
You're
I'm
even
gone.
out of it. I sold the
Yeah.
majority at 24. And I'm like, I have a little legacy piece left. And I'm like, why do I even have this? It's such a trash stock.
I think they're taking a hit on it. Brett, you got some details on that Intel deal?
They just got a strategic investment from Silver
Yeah,
Lake.
it is just a report still. It is still a report. It's a Bloomberg report that they're near a deal to sell Altera to Silver Lake. And then say that again, Dennis.
I think we're
The
actually
stake
getting.
from Silver
Coincidentally,
Lake.
we just brought this up. We're getting confirmation right now. 8:30 just dropped, so we actually have a headline here from Business Wire. We have the official release.
Okay, announced
So
this. Okay, my bad.
just
Yeah,
as
yeah.
it's funny, we just brought
Let
that
me
up,
read
and it
through this.
officially just got released right now. Sale
Yeah,
of
they told
51% stake to Silver Lake to accelerate Altera's. This is coming from Intel. Altera's independence and leadership in programmable semiconductor solutions. Just trying to read through it. Yeah, today announced
8.75 billion.
8.75 billion.
Yep.
Yeah,
Intel will
I
own the
think
remaining 49%. So they're selling 51%. That's how
Yep.
they always do it. They sell like the majority, and then they don't ever spin you or give you anything else. So they just kind of take it and then they say, "Oh, we still own part of that." Are they planning on like? I'm just trying to read through the press release because it just came out. If they're planning on like, no, I don't see anything about like spinning this off or anything. Just selling the 51% stake of it to Silver Lake. I don't know what to think of that.
I
I
think
don't
they
like the
took.
way Intel does their financial engineering.
Yeah, I don't know what they paid for it, so I don't know what if this was the overall greatest thing. But Intel did get a pop off this. Wow, that was actually near the lows of the move on Friday. So been a lot of pressure on this. Let's see. In the 21 handle, we don't have anything. You're looking target on the upside. I mean, Wednesday's high was 2173. So the street is kind of taking this kind of just with a grain of salt here.
The other big one we want to talk about, we only got a minute before Tim comes on. So Pfizer announced that they are discontinuing their weight loss drug pill. I forget the name of it. I could find it here. Dangunliprin. But it sounds like it wasn't very good. The concerns, they're citing trial concerns, so they pulled their weight loss drug, their pill. So now everybody's getting excited about Viking Therapeutics here again because it's up 16%. Also, Structure Therapeutics, GPCR, is up 17%. Obviously, both of these companies are working on an oral pill. What they think is that if Pfizer pill is failing, maybe they start thinking about buying a Structure GPCR or buying a VKTX again. I've been down this road. It worked for a while and stuck around too long. And, obviously it's been just a disaster in 2025. These stocks continue to leak. But I mean, every biotech company has been a disaster in 2025. The XBI is down from 94 to 74. I mean, no sector has really been hit harder. You want to talk about, relative weakness. The XBI is full of that. We were $85. Now we're $75. That was the day the Trump tariffs were obviously announced, and we're down significantly from that too. So biotech's just been a disaster. But we do get a little bit of pop here this morning in GPCR and VKTX, as market is speculating that maybe Pfizer starts sniffing around if their own pill is not working.
Yeah, or people could take the other side of the coin and say, well, maybe oral drugs are not going to work. So they're not.
That's the unknown here, right? Nobody wants to keep jabbing themselves in the stomach if they don't have to. So we've said that for a long time. You can come up with a pill There's a lot of people that would probably rather take a pill than to give themselves a needle in the stomach, 3 times a week or however often you have to do it. So, yeah, I mean, pills sounds great. Nobody's got it there yet. Nobody's got it across the finish line yet.
Yeah, I mean, also looking at some of the, I mean, Lilly, I mean, these stocks, man, they look, I mean, even though the market's rallied so much, they're not looking great at all. I mean, Dennis, you talked about the XLV the other day too. I
It's
mean,
a disaster.
yeah, I mean, don't
I
know if
mean,
they,
all the weight loss drugs really went RFK because we know he's more of a health and fitness person as opposed to take a pill and like lose all your weight. They've just been under pressure. Lilly's been under pressure. It's the leader. Novo has been an absolute disaster. Like NBO, if we're looking here, think about the move that it had, 2023, 2024, going from 60 to $150, $148. We've round tripped the whole damn thing in Novo. It's all gone. Like all that benefit that it's got from there ceases to exist. It's come all the way back to 60. That's incredible. I mean, Lilly has not even getting close to round tripping like Novo did. Lilly's still best of breed, has held up fairly well. I mean, if it round tripped the whole thing, it'd be back down to $400, and people would be like, "Oh my gosh!" So that's what Novo did. Novo basically did the Lilly equivalent, going from 400 to 900 and back to 400. Lilly has not done that. So actually, Lilly has held up pretty well compared to Novo.
we're getting a nice little rally here, back up towards the highs of the session. Key Bank used this opportunity in Apple to give it.
Just 1 sec. I'm not done with that comment. I know you guys got
sorry.
the show keep going, but I want to just continue on the drug theme here for a second because I think it's
Sure.
important. DG in the chat making a very good point. Trump says tariffs for the drugs are coming. So we have not heard anything official from pharmaceuticals out of the White House, but he's basically talked about tariffing everything. We haven't heard anything about pharmaceuticals yet. It is coming, and I think that does weigh on pharmaceuticals. It's the reason that I said I don't want to add to my Bristol Myers here right now, even though I don't have Bristol Myers, but I don't want to add to my Pfizer's been a disaster. I don't want to add to that at all. But I've said I would like to rebuy my Bristol Myers. So I took Bristol Myers from 43 to 60. It was a fantastic trade for me in 2024. Now it's back down here at 50. Go from 60 to 50 very, very quickly. Wow. I'm scared to touch any drugs right now because this again is the market that prices in nothing. Don't expect, all of a sudden, they announce something on pharmaceuticals. They'll be like, oh yeah, that's no big deal. No, the drug stocks all go down on it. That's just the way this market is. It is like the not obvious market, meaning that they don't price in anything. So I don't think it's priced in. Some people are saying, oh, all the bad news is priced in. I don't think so on Merck and Pfizer and, all these drug stocks here. So I'm hesitant until I actually get clarity on where the White House is going on pharmaceuticals, because if those tariffs come out, they don't look good, those drugs could all get hit again. So I'm waiting on before just jumping in and getting down and dirty, even though a stock like Bristol Myers looks dirt cheap at $50.
You feel like talking market structure?
I do, always.
Okay. All right. Let's bring them to the stage. Tim.
Joel, Dennis, good to see you. What could be better than market structure on a Monday?
I love market structure Mondays. I love Tim Quast. I love market structure Edge. How are you, buddy?
Good, thank you. I'm tan because I went out and sailed in St. Vincent and the Grenadines.
Oh my gosh!
To get away from the tariff tantrum, which proved to be good timing.
Yeah.
And yeah. So
where are you now? Are you home now?
I'm in Denver. We're down in Denver, but this isn't a good time to be in as you know, Dennis. In April and May, you don't want to be in the north. It's just a sloppy, muddy mess.
Sloppy.
Yeah. So Steamboat is not the place. Steamboat Springs is not the place to be. Yeah.
Just a mess. I like though it's warming up a bit, but it's just sloppy. All the snow's melting and it's dirty looking. It's just not beautiful.
It's a lot like the market.
Beautiful up here, just cold.
Right. Yeah. Exactly. Yes. This is not helpful to anyone, is it?
So Tim, and again, well, I want you to bring in Market Structure Edge, obviously, too. So if you
Yep.
want to start prepping to show your screen, that would be fantastic. But
Yeah, sure.
I want to just get, you're over on vacation, you're watching these markets, you're watching headline after headline come from the White House. Sometimes it seems like 4 or 5 in a single day, and the market's just getting whipsawed all over the place here. You're probably enjoying your vacay and saying, I'm glad I didn't get all whipsawed in this action, but I just want to get your thoughts now. Sometimes it's great to have a vacation, come back refreshed, look at the markets from that, unbiased point of view, and you sometimes get some clarity here. So I want to know if Tim Quast has any more clarity on this S&P, because it has been a wild ride since you've been gone.
Well, this will sound self-serving, but I'm not surprised by it. We had this conversation before I left. I talked about how on December 18, we had the biggest volatility event ever, so far as we know. I mean, I couldn't find anything else that compared to it in SPY. And I shared back in, I think it was in January, that the market moves in these cycles, and if you measure volatility, you could predict ahead where volatility might be. I think this was in February when we had this conversation, and I said, well, it's possible, based on these data, that we could have a massive volatility event. I mean, it's what the data would indicate. And to me, the value that our conversations can have here is that we talk about something different from what everybody else talks about, which is, it's the destruction of globalization, the balance of trade, the economic order that has existed for a number of decades. I would side with Mark Rowan, the co-founder CEO of Apollo, who said last week, look, what's wrong with that? I mean, the US has been the most open market since World War II. What's wrong with being 10th or 20th? There's nothing wrong with rebalancing the world trade order if it's costing Americans jobs and currency value. I don't think there's anything wrong with that. Now, back to the point. The point is, to me, and this is what gets left out of the discussion, that the market today is dependent on a delicate balance. We call it the 1-2-3 rule between ETFs, exchange traded funds. This is the principal investment vehicle of the day. They attracted $2 trillion of assets in the last trailing 12 months. That includes conversions from index funds. Then you have the underlying basket of equities, which is principally US equities, but it's global. And that basket continues to get smaller because there is more M&A than there are IPOs. And then third are derivatives that are associated with those. There are options that trade on stocks, indexes, and ETFs, and futures. The benchmarks are effectively futures. So what happens when volatility gets introduced into that equation? We could talk about what's cause and what's effect, but you could look at that and say, boy, if you get volatility of more than 3%, the market will destabilize. Why? Because momentum stocks have volatility of more than 3%. There's not a lot of them at any given time. And so I look at all of that and say, well, you could have a major volatility event that people could misconstrue as the globe throwing out the American baby with the bathwater, and it's not the case. And there's a second shoe in that too. What if everything recovers and everybody thinks everything's fine and it's not? I think both of those are things to discuss. And so from a market structure standpoint, I wasn't surprised at all. I moved my trading account to cash March 25th. Came back, did some trading, and
fantastic move.
Well,
move.
Right. So my account is where it was then. By the way, so
that was better than most.
Right. So and that's not because I'm a genius. I am not a genius by any stretch, as we all know. That I've got a small number of brain cells, but I pay a lot of attention to demand, supply, and volatility. Give me 3 things for trading, and those will be my 3 choices always: demand, supply, and volatility. It's the same in any market. and they're measurable. So, traders, this to me is the most important thing. By the way, look at this. Momentum, 0 stocks. Low volatility, 0 stocks. That almost never happens. These are just quantitative queries, we could call them, that are going to show us every day at Market Structure Edge things.
Wow.
Right?
Well, last time you were on, there was nothing in the momentum.
Yep.
And then
Now there's
now
nothing
you
in the low ball.
Right. I think it was low volatility, right? There were actually, because there's nothing that had low volatility.
Nothing. Still nothing.
Right. The volatility in the tech sector in the last 5 days is still 10.2%. What that means, folks, is that the average component of the tech sector moved from intraday highest to lowest prices. Take a 5-day read of that, 10%. I mean, the S&P 500 is still at 7%. So these moves that consume half the volatility, you edge users who use the platform, you know what we say about that. If something is up or down half the volatility, it's opportunity. And so we're seeing those things develop. But this is the condition in the market. You cannot find good momentum. That should be telling. I mean, if the futures are way up and yet there's nothing in the momentum portfolio, be very careful. You should look around and say, okay, what is it we should be aware of? And I will always say context. The market has a cadence and a calendar and narrative. It's not every day we just start over at 0. Citadel does. All the high frequency traders do, but the rest of us shouldn't, right? We should be aware of, well, where are we in the continuum? And we can come to that next, but that's my answer.
Tim, is this dynamic from taking data in from now, or is this from Friday?
This is Friday. This is Friday. But
okay. So we lost momentum, we lost volatility. If we lose category number 3, we're really going to be in trouble.
Right. Mega cap. So this is like, call it 65 to 68% of market cap, and it's 106 stocks. By the way, back before, I think you could back up to March 25th, and there were 120 in here. So the consequence of this volatility is that it has knocked a hunk of $100 billion stocks out of that $100 billion category. Wow. But look at this. Look at this is demand. So demand's dropped all the way to 1.7, and supply has come down. Well, those are the conditions that will always presage a rally. I mean, we always know. This is something we point to all the time. Anytime the market drops below this green line, if you can see it's at 4, so red line's at 6. So here's where we are. Anytime it drops below that green line, you're going to have a short-term rally. You can count on it, traders, not because 4 is meaningful, but because it tells us the demand-supply equation in the market. And anytime it gets overbalanced to the downside or the upside, it will mean revert. Why? I go back to one of the most basic things about trading. All stocks have to trade between the bid to buy and the offer to sell, which will never be the same. The offer is always lower. The bid to buy is always lower than the offer to sell. And then machines cross that spread and bring prices together. Well, what happens when the spread is enormous? Things destabilize, demand disappears, and the market drops to a level where there will have to be some form of mean reversion. And then you look at the supply side. You say, well, what's happened to it? Well, it was 52% when I went to see. I am not going to be long a market that is 52% short, right? Now, where is it? Well, it's come down, but it actually on Friday settled out at about 50.2%. That's not great. And that should be a cautionary tale. I think we can have a very nice short-term rally, but unless these conditions change significantly, we could have more trouble ahead. So traders, is how you have to think about it. What's happening this week besides Good Friday and then next Sunday, Easter? Options expirations. Why does this?
Thursday, on this Thursday, right? Yeah.
Wednesday, Thursday. Right? Yeah. And it's jammed together. So VIX expirations are on Wednesday, as are AM dated index options, which all the global macro money, the global indexes that try to have asset allocation, all of it's our only European style derivative in the market. Everything else you can use at any point, but the AM dated index options have a date certain. And this week, very strangely, doesn't happen very often, will expire with VIX expirations. Well, what happened to all the people who sold volatility in the last month? They got absolutely crucified. I don't know. That's no pun intended. During the Good Friday week, there is a chance that somebody went broke. Maybe somebody's. In periods like this, I will say that there is a risk somebody did, and it won't be apparent till after the fact. So traders, again, don't get yourself out over your skis. If you go long, but have a short hedge, because we don't know when it's going to deteriorate. I use SPXU, SPXL. I trade UVIX. I trade volatility, and I trade long short the market when there were no individual stocks to trade. But you got to be really careful here. I think we could have good gains into Thursday because hedge funds will know all this stuff too. They're going to say, well, there's a bunch of heavily discounted options. Let's go scoop up baskets of those, which will attract people back to the market and drive the broad measures up, and everybody will start buying this stuff, and then they dump it right before it expires. And you don't want to be the one holding that bag. So the only way to know those things is to look at demand, supply, volatility, and the context, the calendar of the marketplace. So Dennis, you are so much closer to these things than I am. You're a much more potent trader than I am. But what's your view of that? Is this a short-term opportunity and then sudden risk?
I just can't get on board with chasing in this market because it's like I was saying before he came on. It's 2025 has been the year of the contrarian. I'll even go back to those two filters. Like if you want to back up and just say, hey, you have nothing momentum filter and nothing in the low volatility filter. Right. What does that tell me? It tells me we're in a contrarian paradise. Because there's no momentum going and the volatility is high. That means we're getting crazy whipsaws happening like this. So, right there is telling me my contrarian strategies likely still work. And what that is you're selling into strength and buying into weakness right now, really until further notice. All my strategies, do that to a certain extent, but sometimes they lean short, sometimes they lean long. And we don't know what the next headline's going to be. But the one thing I do know is that if you've been chasing in 2025, you've been usually on the wrong side of the trade.
I think you're right. I think that people have lost a meaningful amounts of money. We don't know who, right? It's where did it happen? And I'm not the only one to say this. Jeff Gundlach from DoubleLine said, when you have this kind of extreme volatility, people go broke. Somewhere in here, someone probably went broke, and we won't know. It's like Archegos Capital. We didn't know for a while what had happened there, but it took down Credit Suisse. Suisse was forced to sell to UBS. It was that bad. And it wasn't anywhere near this volatility event. How do you know what to do with a basket when the moves are double digits? Man, you can just lose your shirt in a heartbeat. We had leveraged volatility instruments last week that moved more than 50%. The rule of thumb is that a leveraged instrument will fail if it moves more than 50%. I don't know I had a couple of those things that were offsetting, and it was just perfect for me. It worked for me, but I thought, who was on the other side of that trade? Not good. I don't know, but I don't think we will get out of this unscathed.
Where's the money going, Tim? Where's the new money coming in? It's coming out of the market. Where's it going?
Great question. Big tech. It's the only place that it's gone. There's a little, as you can see, there's a little uptick here. Airlines and cruise ships, they're scooting at the bottom. We've certainly seen some movement here, but there's a little uptick in big tech, which hit 1. The only problem is the supply side is moving just as fast.
Can you show that? Can you blow up big tech?
Are you not? Okay, yeah, sure. So, we just call it big tech because, the name keeps changing. We could always change the constitution of this. These are the things we like to look at in that basket. And you would say, why would you put Shopify, AMD, and Netflix in there? Well, I think they have the characteristics that give us a good sense of what's occurring. Just look at this. So all these ones, 1.8, but the trend is up in Google, Microsoft, Netflix, NVIDIA. There was immense short covering in this group. Netflix and NVIDIA are still 55% short. But it's such a massive part of the market that it gives you a good idea of where the money went. And guess what? If you look at the last week, something we track, you can look across here. The only stock with active money as a leader was Amazon. I take it back. Netflix and Nvidia. So there are 3 where there were stock pickers. But if you looked at the patterns behind these data, which we do, the only buyer in the market in the last 5 days were indexes and ETFs, principally ETFs. And is it the ETFs or is it the market makers who were exposed to the basket? What I point out to people is you have to understand how ETFs work. That ETFs, so I'm just making this up. You've got BlackRock, you've got Morgan Stanley. BlackRock says, I'm going to give you some IVV shares, so S&P 500 tracking ETF. And Morgan Stanley says, here's a basket of stocks equal to that in exchange. Then Morgan Stanley's going to go sell IVV. Then that occurs off market in a large block. And then overnight, the Dow futures drop 2,000 points. Now what? Who's in trouble in this relationship? Because this exchange that occurred in equal value is wildly out of whack. I'm going to submit that Morgan Stanley's got to get square. And what's it going to do? Well, it's going to short everything in the basket and buy puts. And then you get massive volatility, and then it's going to reverse that to try to make up its loss in as short a period as possible. That's what's happening. And it doesn't.
All right, Tim, I'm going under my desk, okay? Tim, you made some good calls here. We got some more questions, but we gotta wrap it up. Tim Quast, Market Structure Monday here from Market Structure. Thanks, Tim. I'll be talking to you real soon.
Good to see you. Thank you.
Well, high volatility.
I mean, Tim was mixed. He was mixed, obviously. Like he wasn't fully, like when he was on 2 weeks ago, he was pretty bearish. He's like a lot of stuff got washed out. So I wouldn't say he was full bearish this time. So he had a fantastic call when he was on a couple weeks ago because, the bearish side was definitely the side of the trade 2 weeks ago. But, we've come back a long ways. I mean, Spinner makes a good point in the chat too. S&P is only 10% off the highs.
Yeah. So
we've come, 50% retraced, the whole move because we were 20% down at one point in time. Now we're only 10. I still think like you look at that and you think like, am I buying stocks now? All uncertainty now. Because if you're buying stocks now, you're banking that we're going back to all-time highs. I mean, day trade's one thing, but I mean, if you really come in as with your swing trade, starting them now, you're basically saying we've got, like we're probably on the path to eventually being at all-time highs again. I don't know if I'm in that camp.
Yeah, I'm not in that camp, man.
And now we go into earnings season here. So I'm still going to say, yeah, maybe the bar is lower for some companies in the earnings season, but there's going to be a lot of uncertainty from the companies themselves. Like you think about what Lululemon, said, or what was the company? It wasn't Lululemon. It was it was one of the shoes or one of the apparel makers. They said last week she was on Jim Cramer, the CEO, and she said we were considering raising guidance, but we just don't know about the tariff uncertainty, so we just stayed. Who was that?
Was it Was it Levi's?
It was Levi's. And then the stock popped when actually she said that. It started popping when she said we considered raising guidance. It means they're doing pretty good. They just don't know about the tariff uncertainty. I mean, how many other companies are in the same boat that they're going to be coming out?
Yeah.
And we just don't know about the tariff uncertainty. So we're just going to, I don't think a lot of companies are going to be coming out like, no, we're raising guidance. So that's a little bit, of an issue. Is it, an overall issue? As we continue to rise, it becomes more of an issue because the stocks aren't discounted as much for that information. So I think you start getting up near 550, 560 SPY, and you probably have happy sellers up there too. Overhead supply, not, and again, maybe there's a deal, maybe there's other, positive headlines that are going to come from the White House here too. Obviously, over the weekend we get, excitement with, that potentially smartphones and computers and chips might be less tariff than other things. But just uncertainty here. So with this much uncertainty, I don't know if I'm going in the full bull camp after we just rallied 10% in a week and a half.
All right. Also, I mean, if you look at where we're off from, even from the lows on Friday. All right. We're gonna wrap it up here. We're gonna ride Dietrich on tomorrow. We got the all-star lineup here. Ryan's going to come and share his thoughts on the markets. I know he'll have some good statistics. Overall here, I just think you got to, I mean, we're right back at last week's highs. I think you're trading your individual stocks. Some of these tech stocks might be higher than that, but it's not, it's up a lot, but it's like just not a flat out short. I mean, you see how this market reacts until you get the next bad headline. So that's
Yeah.
it for today.
And
Dennis,
I
any
saw a
com-
concerning stat from Ryan Dietrich too this weekend, and he'll talk about it tomorrow.
Okay, sounds good.
We'll see you over in the STN.